Hello guys, what's up? I hope you all are doing very well. Um, in today's video, we'll look at Nifty 50 analysis and Nifty's support and resistance levels. We will also look at open interest and FII data. So let's begin with our FII data first. Futures and options, and then this is FII open interest in index futures. They have increased it minus 1.68 lakhs to minus 1.72 lakhs. So they have increased their short positions by 4,000. And if you look at cash market, FI sold net in cash market minus 1.6 thousand crores, and DI also sold after so many days of buying. They sold like after a long period of minus 329 crores. And if we go to option chain data, we can clearly see over here it's 25,000 has the maximum number of open interest on the call side. 1 crore 73 lakhs or 1 crore 74 lakhs. On the put side, it's only 73 lakhs, so it's like more than a double open interest on the call side. PCR is 0.62. Events, we have one holiday on Wednesday, so we only have 4 sessions to monthly expiry, and it can be volatile. So it can be monthly expiry weeks is a bit of volatile. I mean, it could be volatile because of like short covering, short build up, long unwinding, long build up. So you have to be very careful, I mean, before you enter in any trade. Okay, so this is our 25,000 is a very big resistance, and on the lower side we can plot 24,800. We can use this level 24,800, and on the top side is 25,000. So 200 buffer, like 200 points buffer. I mean, in market can be in this range, and if it breaks up, we can see till here 25,100 this point, and then if it breaches this as well, then we can look at 25,150. On the lower side, this gap in between would act as a, a support for the market, because orders, and then order filling and stuff like that. But anyway, we will only look at highest open interest levels, which are 24,800 on the call side, sorry, on the put side, because it's acting as a support. 60 lakhs, so it's almost like 3x over here. So 24,800 is a big support. On this side, right, I have added these two strike prices, 24,005, actually 24,800 call option, and on this side I've added 24,900 put option. So where you can buy these two, I mean, you can buy any strike prices, but the profitable zone is at very bottom of any strike price. I mean, when you are buying an option, just look for the lowest level of it, and then mark or just plot one horizontal line on it. And when the price reaches to that level, right, and if you have the confirmation that buyers are exiting their positions, like sorry, sellers are exiting their positions, that means sellers are becoming buyers at that point of time, then the demand, the inflow of it would increase the strike price level. So let's say sellers are exiting their position on this level 138, and you can choose any strike price, and this is just for like to make you understand. This is not like you have to buy this or anything. So let's say 138, sellers are exiting at 138, and then when you have this confirmation that, by looking at maybe bullish candle, or like, hammer, or any sort of bullish candle, and then you have the confirmation, then you can enter in this trade, and then you can buy at this level 138. You can use any limit order, or any mark, any order, and the market would go to the next resistance level. And if the market reaches that resistance also, you can see big upward movements until seller becomes sellers again, until the seller comes to that strike price, and then they start selling. So this is, this is the best option strategy you can opt for. I mean, buying at very low level, and when, of course, you have to see open interest as well. If the index is supporting that call option or put option, if the market is bearish, then always, you always have to choose put option. And then where you're buying, that what matters. If you're buying at the lowest level, where sellers are becoming buyers, so that means they would push the price up until the next resistance. So you can exit your position there. And if that resistance also breaches, then you can add more to that strike price, so that you can build up your more, so that you can build your volume, and then you can maximize your profits. But only then, when sellers are not, like, sellers not coming in. If they're coming in, if they're, like, selling, if they start selling, so you should stop it by then. You should, like, exit your position. So this is just an illustration. This is just like for your education purposes. This is not like an investment advice or anything. This is just like, how you should buy an option. Because this strategy works like 80% of the time. 80%, like, 20%, of course, no strategy could work 100%. So this was it. These are the crucial levels, 25,000 on the top side, and on the support side is 24,800. And you can choose your strike prices accordingly. And so let's see how Bitcoin can work. Bitcoin is additional, like, if you trade in Bitcoin, it's, you can see, if you if you trade in Bitcoin, and on Friday, if you saw the market, how the market reacted after the Fed J Paul, like, his speech was very dovish, and then market took it um, very strongly, like positive. So you can see how the Bitcoin reacted on Friday. So almost like 5,000 points up. It was up by 5,000 points. So the one candle, if I show you this early time frame, right? On the early time frame, you can see, this alone, like, this candle is alone, how much it is. Okay, this candle alone was 2.94%. It's like 3.3k, 3,000, 3.3k points candle. This was very bullish. This Bitcoin was very bullish, because market took it positive, and after the comments of Fed. So, but if you talk about the levels, how we can buy this now, because it's very bullish. And now I'm still actually a bit skeptical about this Bitcoin, because it's like, because this candle, this is like very, people made a lot of money, by this candle, and then people lost a lot of money. But then profit bookings happen, after this candle, profit bookings are like there. We can see a bit of profit booking, and it's almost like, it's 50%. Yeah, if you see over here, like, it's almost, yeah, sort of a 50% retracement. So, but if you talk about like where we should buy now and then where we should enter the trade, I think this could be this could be the like intraday, like if you do intraday trading, right? This again, the support level is like one 112,000, somewhere there. If it comes down to this level, maybe was, I mean, depends on the buyers, I mean, it depends on the demand of it, but I'm still like waiting for the level like 112 now. And if it breaches this level, then again I would add somewhere about somewhere about here, sorry, 110. This has like a bit of fair value gap also, you see. So fair value gap is like intact over here, still intact, see. So I'm still waiting for this level to fill this gap, or maybe take more orders from here, like whatever the demand, and then it moves back again. And then where it will go, we can't say anything. I mean, people are saying that it can go to 1 million. I mean, of course, I mean, in the long time, maybe or maybe not. I mean, we are not sure about that, right? But again, I mean, if you talk about like intraday or like, swing trading, then I would wait until it reaches to the major to its major support. And then support is somewhere here, 112 and 110, and then I would go for it. So that's all, guys. I hope your trading session for tomorrow and next whole week goes well. So good luck. I'll see you in the next video.